ขอต้อนรับคุณผู้ชมท่านนะคะเข้าสู่ช่วงของ World Update ค่ะคุณผู้ชมคะก้าวเข้าสู่ปี 2017 อย่างเป็นทางการแล้วนะคะหลายคนก็ยังคงจับตามองกันต่อไปค่ะกับผลกระทบของชัยชนะคุณโดนัลด์ทรัมป์ประธานาธิบดีคนใหม่ของสหรัฐค่ะซึ่งตลาดณขณะนี้นะคะก็ยังหลงอยู่กับการคาดหวังค่ะว่าคุณทรัมป์นั้นจะมีการออกนโยบายกระตุ้นเศรษฐกิจต่างๆเข้ามากระตุ้นนะคะเร่งการลงทุนของเศรษฐกิจสหรัฐและจะเป็นอานิสงส์นะคะต่อเศรษฐกิจโลกอย่างไรก็ตามนะคะทางพิมโก้มองค่ะว่าในปีนี้นะคะเศรษฐกิจโลกจะมีการขยายตัวได้ดีกว่าปีที่ผ่านมาเล็กน้อยอยู่ที่ประมาณ 2.5-3% แต่มีปัจจัยเสี่ยงอะไรที่น่าจับตามองบ้างความเสี่ยงที่น่ากลัวที่สุดคืออะไรซึ่งในวันนี้นะคะเราไปติดตามกันค่ะกับบทสัมภาษณ์ของคุณราจา มัคเคอร์จีนะคะ Executive Vice President Head of Credit Research Asia จาก Pimco Asia ที่ก็เดินทางนะคะมาประเทศไทยให้เกียรติสัมภาษณ์พิเศษกับทาง Money Channel ค่ะ
As we entered 2017, we had some trepidation. We had some fears that post the Trump election, the market has been romancing with the idea of strong economic growth, not only in the US, but also in other parts of the world. And we have seen that in the equity market rally and also in a strong dollar. So we think that our baseline forecast for 2017 is for continued economic growth, so slightly higher than 2016, including stronger growth in the United States. But we also feel that all of the policy expectations, the tax cuts, the fiscal stimulus, meaning higher spending, deregulation of the financial sector, those are still policy talk and not real action.
You're saying that the economy, global economy in 2017 tends to expand better than the previous year. In how many percent do you think?
Sure. So we think that for 2017, our baseline outlook is for the global economy to grow between 2.5% to 3%. So that's slightly higher than 2016. But for inflation, we expect global inflation outlook to increase to 2.25%, up from 1.6%. And a lot of that is driven from the US and the Fed interest rate hiking cycle.
Okay, and factors that we have to focus on this year?
Sure, I think there are several factors. The primary framework we use is three important transitions that the global economy is undergoing today. Number one is the transition from monetary, central bank action, keeping interest rates low, to fiscal. Central banks are running out of room to lower interest rates, and the Fed is increasing interest rates. Fiscal policy is where the government comes in, larger fiscal deficits and increased spending. Number two, globalization that really has helped and fueled economic growth worldwide. Now we are going into a phase of deglobalization, and that's coming from populism, nationalism, and also from
You mean
Trump
like
policies.
with the Brexit and then America come
Exactly.
first?
With Brexit, America first choice policies, and then we have a slew of elections in Europe in 2017. Now, our base case is we don't expect any large surprises. Now, who could have predicted Brexit? But we don't expect any major upsets in any of the European elections. But what it'll do is it's going to create a lot of volatility.
What is the, let's say, the biggest risk for this year for you?
I think the biggest risk this year for me is really the transition of policy expectations and real policy. Because as I mentioned, we have those three different transitions, difficult transitions going through, and we have this huge uncertainty of a new administration and its impact on global trade and various trade policies. So we think that that gives us some pause, and we think that the market may be romancing a bit too much. So in the US, our baseline outlook is for the US economy to grow between 2 and 2.5%. So that US economy will still expand, and we think inflation expectation probably will exceed market expectations and maybe exceed 2%. So broadly, we like the US housing market, which is tied to the US economic recovery. If you go to the Eurozone, we think growth there will be between 1 and 1.5%. So still above trend, but below its capacity. Inflation, we think, is going to be significantly lower than the 2% target that they have. So we think generally growth will be low but stable and with a very supportive central bank, the ECB. Moving on to Asia, we think Japan, we expect real GDP growth to be 1%. That's been driven by both fiscal and a lower yen, the currency has depreciated. But we also think that the Central Bank of Japan, the BOJ, they're also experimenting with monetary policy, yield curve control, and that will have a significant impact on interest rate differentials, meaning Japanese yields are being held constant, whereas US rates and the rest of the world is increasing.
What is the purpose of BOJ trying to keep the yield very low to 0%?
Well, I think the one thing that has happened during this experimentation that it has made the currency weaker.
Okay.
By keeping interest rates low, it also gives them room to do more fiscal stimulus, where they are expanding their budget deficit. They don't want real interest rates to go up that fast. At the same time, they also want the yen to depreciate, but not too much, because that is going to catch President Trump's attention. And he has already told about countries that are running
And Japan is one
trade
of them.
surplus, and Japan is one of them. You have Germany and you have China. So I think that's the experimentation they've done. Now, if you look back, since early last year, they've actually been successful, because growth has increased positively. Inflation is still low, and you have a currency that's much weaker compared to in the past. And then moving to China, I think China, we expect a slowing economy, GDP growth rates of about 6 to 6.5% in 2017. But China is in a delicate act of balancing various dominoes, and these dominoes are the focus on stability over credit fuel growth for 2017, because last year we saw a big boom in the commodity markets and the property markets. So credit fuel growth leads to asset bubbles, and that's what the government is trying to reduce into 2017. So we think that 2017, as a result, growth will slow down, but we don't expect a major crash in the economy or the financial system for this year.
And as we can see now that Fed has increased the interest rate twice in around 10 years. Last time was in December, and then now they say that they're going to increase 3 times this year. What is your view on that?
Sure. So if I may take a step back, back in 2014, Pimco came up with the concept of the new neutral. So the new neutral very simply means an interest rate at the level of which the economy is neither hurt nor is positive. So it maintains the economy at a very steady rate. And we thought that that rate would be around 2.5%. And the reason why we came up with that is because we felt that lower global growth and higher global leverage or higher global debt would induce central banks to keep rates low. So if you look today, we've had 2 rates, as you mentioned. Our house view is we will see 2 to 3 rate hikes, but it may be more gradual versus a rather steep hike. By that I mean, if you look at the March market expectations of interest rate or the Federal FOMC meeting, the probability of a rate hike is now gone from 30% to 15%, and that was driven by a weaker employment report that we saw last Friday. So we think that interest rates are still going to be increasing, but perhaps a bit more gradual. But inflation expectations, as I mentioned earlier, we think inflation expectation is going to exceed market expectations.